Hi there, this is Aubrey Chauke. I'm a tutor for accounting, business studies, EMS, as well as research. If you're watching this, you're definitely at the right place. Please don't forget to hit that subscribe button on your bottom right. And once you're done with that, you can definitely leave your comments on the comment section. With that being said, welcome to the new year. Compliments of the new season. I trust that you enjoyed your holidays and that now that we are back at school, you are ready to work on your future. You are ready to put all the efforts that are required in order for you to do well in your studies. Before we go into the lesson of the day, I'd like to make some few announcements. Firstly, if you are in Hammaskral, I'm pleased to let you know that we have contact lessons that are taking place at Tusanang Daycare Center, opposite Moditela Secondary School. All you have to do is to pay a registration of 100 Rand, and then you also have to pay a monthly fee of 250 per subject. Please note that our registration of 100 Rand is once off. You only pay it once. Announcement number 2, if you want me to help you or help your child with accounting, I'm pleased to let you know that I'm open for registration at 350 per subject, and all the lessons that I'll be doing with you are recorded, and so your child will be able to have a copy of that particular lesson. My apologies for my voice. I have flu, so as a result, I'm having some short breath issues, but it shall be well. Let's get into the lesson. Now, this lesson that I'm going to do today is based on what we call the retained income note. It's from the grade 12 accounting February-March 2018, which are also known as supplementary exams. So I'm only going to be doing the retained income note. So I hope that you will enjoy this lesson, and please know that I'll be working through 3 documents: the question paper, answer sheet, and where we'll be doing our calculations. Now, with that out of the way, let's just look at the question that we'll be dealing with. Our question is on question 4. So if you want to attempt this, you can download the February-March 2018 accounting question paper and the answer sheet so that you can be able to practice. So please try as much as possible to make sure that you get this important paper. Okay, with that out of the way, let's continue with our assessment for the day. So we're going to be doing question 4, only 4.2.1b, which is the retained income notes, as you can see here. Okay, so we're only going to be doing these notes. If you want me to help you with the rest of the paper, you can book your lesson and pay for it so that I can be able to do with you live on Skype, Zoom, Teams, any of your choice, and then I'll send you a copy of that particular lesson. Now let's continue to do what we're supposed to do. Now, firstly, I think it's very important for us to understand what are we talking about when we talk about retained income. Retained income refers to the money, the profits that have been kept, the profits that the business has kept for future expansion. Like, for example, you've seen businesses at home at the end of the year, after they've made their profits and paid everything, they will keep some money to say, okay, we will use this money in the future to grow this business. So when we talk about retained income, we are also talking about accumulated profits. So these are the profits that we did not release to the shareholders or to the owners. We kept these profits for expansion purposes. I hope this makes sense. With that out of the way, let's get into the question and just understand what we're supposed to do. So remember, when you prepare the notes to the balance sheet, you are normally required to do certain things, but in this case they only required the ordinary share capital and the retained income. All the other workings will have to be shown in brackets on the face of the balance sheet, but because this is not a paid lesson, I'm only focusing on the retained income. So I will do that particular note with you to show you how this note works. And the most important thing about accounting when it comes to dealing with this note is that it's very important for you to know the formula. It's very important for you to know the formula of that particular note that you are required to do, that particular financial statement that you are required to do. Now here you can see that we are told that we're given the written income note, and the first thing that they gave us is the balance. This opening balance is normally taken from the extract that will be given to you on the additional information. So if you come here and go to the additional information, you can see that we have some extracts, and then they already have the opening balance of the retained income, which is this one on 1 July 2016. And then another thing that is very important is for you to be able to establish the beginning of your financial year. So from this information, we can already see that our opening balance is on 1 July 2016 to 30 June 2017. So in accounting, financial period is very important. You must always make sure that you know when does the year start and when does the year end. So we've already been given the balance, and then they entered it on our behalf. So this means that we don't have to do anything about it because it's already there for us. And then from there, we need to be able to remember how is the format like, what comes after the balance. Now what comes here after is net profit after tax. And we must show the workings in bracket. How are we going to calculate our net profit after tax? We'll get the information about the net profit after tax from the adjustments. Now on adjustment number F, they told us something that income tax for the year amounted to 4,800. Let me just erase this so that we can be able to do some note taking, which is very important. There's this concept that Ashraf Patel likes to talk about when he teaches accounting. He always encourages students to read the full question, and when you read the full question, this gives you the opportunity to be able to understand exactly what you are required to do. So on this information, they're telling us that income tax for the year, income tax is amounting to 408,800. So this is our income tax, and then they're telling us that income tax is 28% of the corrected net profit. This means that this income tax was given to us after they took into consideration the adjustments that are here. So for us, what we're going to do is we're just going to look for the correct net profit after tax, because the format says that it's supposed to be net profit after tax, and which is at the bottom of your income statement. So unfortunately here, because we're not given the income statement, we were just given the information that is necessary for us to be able to use. So we know that net profit after tax is okay. So what we're going to do is we're going to look for net profit after tax. Okay, so we'll look for net profit after tax. Now the first thing that we need to think about is that what is it that we know, what is it that is given to us. We are told that income tax is equals to 408,800, and we are also told that the rate of income tax is equals to 28%. So what we're supposed to do is that we must get the net profit before tax first, before we get the net profit after tax. Okay, so what are we going to do? It means that like we know that I'm gonna call it NBT, net profit before tax. NBT multiplied by the rate is equals to income tax. Okay, so what we're saying is that net profit before tax multiplied by that particular rate of tax, it will give us the income tax that we're supposed to have. And then we know that net profit before tax is not given, so we'll have NBT multiply by, remember the rate is given as 28%, so it will be 0.28 is equals to 408,800. So we want to get the net profit after tax. Okay, then from here, what are we going to do? We're going to try and get rid of this 28% so that we can have NBT only. Okay, so now when this is when we try to get rid of this, we would say that NBT times 0.28 divided by 0.28, and then even this side we do the same thing. Remember in maths we were told that what you do on the right must be done also on the, what is done on the right hand side must be done on the left hand side. So that principle comes into play here. So remember, before, for them to be able to get this income tax, they multiplied. So in this case, for us to be able to get net profit before tax, we must do the reversal, and the reversal will be only done when we divide. So we'll divide here also by 0.28. Okay, and then our NBT, which is the net profit before tax, it will be 408,800 divided by 0.28, which gives me 1,460,000. And then this is our net profit before tax. So for us to get net profit after tax, we will take this NBT that we have. So I'm just gonna go and write it in the note. So we're gonna have 1,460,000 minus that 408,800, and then we will have our net profit after tax. Okay, so 1,460,000 minus 408,800, it gives us 1,051 200. So we already have our net profit after tax. So we have already come up with one part. Now when the examination marker marks your script, they are going to go through all this. They are going to look at the workings. So it's very important that you show somewhere all these workings that we've done. You show them on your answer script, okay, so that you can be able to earn part marks. And then from there, the retained income format says that we have the repurchase of shares. If there were any shares that were bought back, we will have the repurchase of shares. Okay, so we're going to go to the information and just find out what they are saying. Now here they're saying that the business has an authorized share capital of 6 million shares. Okay, so this means that this business can only sell 6 million shares. They cannot sell more than that. And here they're saying 70% of the shares were issued on 1 July 2016. So this means that, like, at the beginning of the year on 1 July, they only had 70% of 6 million. Those were the only shares that were issued up to date. Okay, so we're gonna try and get 70% of 6 million. So remember, we want issued shares. So now we wanna, let me just underline here and use a different pen so that we can be able to tell that what we were doing. So we're now going to deal with issued shares. So I'll just use blue. Okay, so we'll have issued shares. Remember, on the information we were told that only 70% of the shares were issued, and then authorized share capital was equals to 6 million. Okay, so and then we know that only 70% of those shares were issued, so we're going to say issued shares is equals to 0.70 times 6 million, so that we can be able to have the number of shares that were issued. So 0.70 multiplied by 6 million, I'm getting 4,200,000. So this is the number of shares that were issued now to date. Okay, on 1 July, these are the number of shares that were issued. You can maybe write shares so that you can be able to remember what you were talking about. So we know that 4,200,000 shares were issued. 70% of 6 million is 4,200,000. So we have that sorted out. Now we go to the information and hear what they're saying. On the information, they are telling us that 60,000 ordinary shares were repurchased from a disgruntled shareholder on 1 December 2016. Okay, so now we need to be able to calculate firstly the average price, get to understand how much was the selling price of the bought shares, and then get to understand the loss that the business made when they bought back the shares. And I will explain how does this affect our retained income. So firstly, let's try and get the average price of the shares. Here on the ordinary share capital on 1 July tells us that the monetary value of the shares that were issued was 3,150,000. So we're going to get that. Number one, we calculate average share price. We know that the monetary value of the shares that we issued is 3,150,000, right? So this is the monetary value, and then for us to be able to get the average price, we divide by the number of shares that we have, which is 4,200,000, and then we'll get that average share price. Okay, now 3,150,000 divide by 4,200,000, we're getting 75 cents. We're getting 0.75. So we are told that the average price here was 75 cents. Okay, so we have this sorted out, and then now we want to determine what was the selling price, the purchase price of those shares. And then the reason why we're trying to find the average share price, because we don't know which bulk of shares was bought back. Remember, all the shares at that time, 4,200 shares were issued, so we don't know which ones were exactly bought back. It's just a mixture, which is the reason why we're using average price. So now we want to get the average price that was used by the business to buy back those shares. Okay, now according to this thing is taking a bit longer to show me the question paper. I don't know why, but according to what we know is that, okay, what we know is that remember here they're saying that the company paid 350 per shares. Okay, they paid 350, and then we know that the selling price of the shares is a difference of is made by two things, which is the loss that the company suffered as well as the difference. Okay, so we're supposed to get that the difference is shown in the loss. So this 3 rand 50, so we can maybe, let's say, purchase price difference. Okay, so we know that those shares were, I think the purchase price was according to the information was 3 rand 50, right? And yes, it was 3 rand 50. So what we're going to do is we say 3 rand 50, 3.50 minus R0.75, so that we can be able to get the difference between the two. So 3.50 minus 0.75 is equals to R275. So now these three prices, this one, the average share price will affect the ordinary share capital note. Okay, these three prices, we need to know what are they going to affect. And then, so obviously because we got the purchase price difference, we can maybe have the purchase price here, it doesn't matter, purchase price, which is 3 rand 50. This one will affect the bank account. Like when you prepare those ledger accounts, only the bank account will be affected by this 350, and then this 2 rand 75 will affect the retained income, which is what we are interested in, which is what we are looking at, which is what we are trying to calculate. So what we're going to do is to check the number of shares that were bought back. Okay, now they told us that 60,000 shares were bought back. So what we're going to do on our retained income note, we're going to say 60,000 shares multiplied by 2 rand 75. So we know that 60,000 multiplied by 2.75 is 165,000. Remember, we are taking this extra money from the profits that we have kept. So it's 165,000. So this reduces the value of our retained income note, because we have to go there and get the money the money that is short, the shortfall to pay for those shares that we are buying back. Remember, when we were doing our calculations, it told us that our average share price is 75 cents. So which means based on our ordinary share capital, we could only buy shares for 75 cents. So we had to look for some money somewhere to be able to add to the remaining balance, so that we can be able to pay for them at 3 rand 50. So this is why we're saying that our retained income will go down by that 165,000. It will have to be adjusted because we bought back some shares. Okay, and then when we pay for 3 rand 50. But remember, we were only supposed to sell, to purchase those shares for 75 cents. But instead of purchasing them for 75 cents, we've purchased them for 3 rand 50, which is more. So this means that this difference here it represents our loss. So you can just say difference or loss. Okay, so this is the loss that we have. We're losing 2.75 instead of purchasing for 350. We're purchasing for 2 rand instead of purchasing for 75 cents, we are purchasing for 350, which is a lot. Those shares were supposed to be bought back for 75 cents based on the average share price, but we bought them for 3 rand 50, so we are making a loss of 2 rand 75 cents. I hope this makes sense. So we are done with that part, and then from there we'll check what we are supposed to do. We have ordinary share dividends. Now, in terms of your ordinary share dividend account is made of 2 types of shares: the dividends that were paid and the dividends that were declared. So we can just write here dividends paid. Most of the time the dividends paid, we will get the amount from the trial balance, the pre-adjusted trial balance. So we'll definitely get it somewhere here. See, they've written dividends on ordinary shares, interim dividends, which is 630,000. So we have to write this as part of our paid dividend. So we're going to write 630,000 here on dividends paid. And then here we're going to have dividends declared. These ones, they were not paid, they were just declared. So we need to get information on the dividends that were declared. This one you have to calculate it yourself. So let's get what they're saying. They're saying 60 ordinary shares were repurchased from a disgruntled shareholder on 1 December. So this person was generally misbehaving, and they're saying the company paid 350 per share. This was paid and recorded on 1 December. Okay, so this was done on December 2016, and here the transaction that affects our final dividend says a final dividend of 22 cents per share was declared on 30 June 2017. So these dividends were declared at the end of the year, and they say only share in the register qualify for final dividend. So this means that we must exclude the shares that were sold. These 60,000 shares must be subtracted from all the shares that were issued, and then we know that only 4,200,000 shares were issued. So we have shares issued, so we know we had 4,200,000 so far. So we purchased 60,000 bags, so that 60,000 must be subtracted. Okay, so we're gonna have that 60,000 here. So 4,200,000 minus 60,000, we are left with 4,140,000. So this means here we're going to have 4,140,000 times 22 cents. Okay, for us to be able to get the value of the dividends that were declared. So the answer times 0.22 gives me 910,800, so which is 910,800. And then for you to be able to confirm that this is correct, you can check the figure that you have from the balance sheet, but then obviously you can only know after you've completed the balance sheet. So this figure is correct, so we're going to just have to add this and subtract this ordinary share dividends. Remember, at the end of the year, money has got to go out to pay for the dividends that were paid as well as the dividends that were declared. This one, ones that were declared, they were paid exactly on 30 June. They were declared on 30 June. So we are going, although we are going to pay them next year, but in the books for this year, we must record them as if they are paid, because the payment affects what's happening in the current financial year. So we must subtract them also here. Remember, only these ones were paid, and then these ones, they are going to be paid in the next financial year, but they must be subtracted in this year. Okay, the money will be taken from the retained income. So we prepare this as if they are paid, hence both dividends are added. So 630,000 plus 910 800 is equals to 1,540,800. So we just left with getting the total. So from there, what we're supposed to do to get the balance, the closing balance of the retained income, we need to take the balance, the opening balance, add the net profit after tax. So 874,000 plus 1,051,200 plus, okay, sorry, subtract 165,000 and then subtract 1,540. You must always verify your answers. 1,540,800. We're getting to 19,400. 219,400. So like, this is how you calculate the retained income for you to be able to get at 11 marks. It's a lot. Just imagine only two notes, ordinary share capital note and the retained income note, and then get around 19 marks, which is a lot. It makes a difference. So we must really make sure that we understand how these things work. So if you want me to show you the entire balance sheet in terms of how you're supposed to prepare it, you know what to do. All you have to do is to use the details that will appear at the end of the video. And don't forget that our lessons only cost 120 for 1 hour 30 minutes. Okay, if you want a monthly fee, you have to pay around 350. I believe that's affordable. With that being said, don't forget to leave your comments. Tell me how you feel about this session. Tell me if it was helpful for you, and once you're done with that, you can share it with your friend. You can share this lesson with your friend and tell them to subscribe. If they are in grade 12, tell them that I'm their favorite accounting teacher here, wanting to make a difference in their lives. And remember that you can always watch our lessons on your smartphone. Please don't forget to book your lessons by using the details that will appear at the end of this video. With that being said, we've reached the end of the lesson. May God richly bless you as you watch this.